good afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain. With me is Aisha Faridi, and there's no respite for the market at this point of time. We are still around that 21,600, so no buying per se emerging at lower levels. Yes, we are marginally off the lowest point of the day, but nonetheless, it continues to be a very strong red that we have at our hand. Almost 150 points knocked off. As far as Nifty is concerned, bigger disappointment and bigger pressure at the Bank Nifty. So clearly Friday was a bit of an aberration where we saw that outperformance. Bank Nifty has reversed its course yet again and it's underperforming. So there's a cut of almost 800 points there, and from the highest point of the trading session, of course, there are bigger cuts at play. The public sector entities are also in red. What's holding out today is IT and Pharma. So Infosys, HCL Tech, Wipro, these are your top three contributors at the index level, and also names like Dr. Reddy's, Divi's, Aurobindo, these are holding up still okay, and Zydus Life, which is up around 7%. So all of these stocks contributing. But one stock I wanted to specifically talk about is Bharat Forge as well. That stock has seen quite a bit of cut after its earnings. The earnings weren't too bad or anything, but it's the commentary which is spooking the street. Bharat Forge has taken a sudden knock, and that's because the commentary regarding Q4 and FY25 is weak. To quote from the management's comment, they say, looking ahead into Q4 and further into FY25, we expect the growth momentum to moderate in both domestic and export market across industries. So there's this moderation which is expected in the demand sentiment, which is impacting the stock price. So that stock clearly, Aisha, taking it on the chin.
Oh yeah, absolutely. 10% lower, acute amount of pressure in F&O as well. Though, on the other hand, like Anisha was flagging off, there's Oro Pharma, and they just had their con call. They're saying that they're confident of achieving that 20% EBITDA margin target, even though the stock has fallen off the day's highs, but it's holding about over 1% in an otherwise weak market. Of course, there's DRL as well, which is going strong. Good numbers coming in from Zydus Life as well, so that's also seeing an earnings reaction. But the weak list is much longer. So you've got a Shakti Sugar, Kirloskar Electric, Serra Sanitary Ware, Anup Engineering, SJVN, Amber Enterprises. These are all names which are getting quite a bit of pressure after their earnings did manage to disappoint the street. The other pocket which everyone's focusing on today is the entire PSU pack once again. And, just to chalk up a list of what really has happened in these names from the yearly highs, so 52-week highs, and how much these stocks have fallen. So clearly, some of the railway stocks are the ones which are seeing another bout of profit taking in today's trading session. Remember, most of these are already actually off 20 to 30% from the yearly tops. But that said, let's move on. Let's bring on board Kunal as well as Naresh and Mahantesh Sabarad as well, and decipher what the market mood is like today and where it's going to head from here. Naresh, hi, afternoon. Let me start off with you first. What's the take on the index? Almost 100 points knocked down.
So we continue to be stuck in the range. 21,400, 600 on the downside is now very important. We just went below those levels in the day, but have recovered. On the upside, 22,100 on the Nifty has been a problem. And we keep seeing this volatility in Bank Nifty, one day up, one day down. And overall, the trend remains down for the larger banks. The only one which really did a move was SBI, but the rest of the banking names continue to be in a problem. At the same time, small cap indices had already moved up quite a bit. So from the point of 22,100, we had gone up another 3-5% on the small cap indices, which did not happen with Nifty. So we are seeing some normalization. And we have a lot of stocks which had gone, say, berserk in the last few weeks in the small cap space, in the PSC space, as well as in a lot of other spaces. So a little bit of a cool down would be normal. So for now, expecting this time to be more of a cool down on the small caps, and we continue to be stuck on the Nifty.
I think Hindustan Aeronautics numbers as well came out. There's a dividend announcement there as well. Think a dividend of about 22 rupees per share, and the numbers right now look okay in terms of a sequential basis. There's been a decent pickup coming in there. The profit as well comes in at about 1261 odd crore rupees. That's what they've delivered, and a decent uptick coming in from the year-on-year performance as well. But like I said, the entire PSU pack is surely under pressure. But Kunal, any observations that you're making about the overall market in particular?
See, the only good part right now for the markets is that the put call ratio for both Nifty and Bank Nifty are oversold. In fact, it's not an expiry day today, fortunately, and that's, I think, could be one of the major reasons why you would probably expect the Bank Nifty to start stabilize at current levels. And hopefully tomorrow when we open up day for the indices, if there is any kind of a mild gap down, say of 150 200 points out for the bank Nifty, and if the put call ratios remain to be at 0.49 0.5 what we've seen right now, we could probably expect that the bank Nifty may sort of get into a stabilizing mode. I would still believe that the likes of SBI and Bank of Baroda could be something which could be a interesting bet at current levels. My sense is that these PSU banking majors are getting into a very strong breakout mode, and looking at the indicators so far, even after this 2 odd percent, 3% correction for these stocks, they could become good, interesting, contra buys from current levels.
Okay, let's wait for those contra-buy signals to emerge properly. But in the meantime, just taking stock of what's happening globally as well, because Indian markets had been underperforming last week, and that continues to be the texture today as well. The European markets have opened well in the green. Asia, of course, most of the markets were shut because of their New Year holidays, etc. But the European markets have opened in the green, and the pre-market rates from US are pretty much flat. So it's not a bad scenario out there, at least across the globe. It's Indian markets which are underperforming a bit. But Mantesh, let me come to you and discuss a couple of these earnings from the auto sector. Hero MotoCorp wasn't a bad set at all. The gross margins improved. They're talking about market share gain. People are looking forward to the performance of the premium segment, but that stock has taken a knock. And now a lot of these exaggerated moves on the downside.
I don't really think these are exaggerated moves on the downside in the sense that there is a background to that. These stocks had actually rallied quite a bit in the last 1 or year, something which took their valuations far too ahead with the upcoming moderation. Now, Bharat Forge is talking of a moderation. Now, you should understand that between the domestic revenue growth and the export revenue growth, the export revenue growth just doesn't exist. It's just about 4%. In fact, it could potentially moderate into the negative territory. And we might see inflation remaining entrenched, and therefore they having to work with higher costs ahead. Margins could also get suppressed.
Kunal, such a sharp downtick reaction, I guess, would be followed up with some more selling?
Ideally, yes, it should be followed up with some more selling. It depends now on the volumes, the delivery volumes for the stock, the built up in open interest, because the stock is in F&O for these names. But looking at the market texture, it doesn't come as a surprise that many of these stocks are actually showing negative tick for themselves. What matters is if in the next couple of days these stocks get into one more round of selling pressure. But apparently, if these stocks come back to their long-term moving averages, 200 DMAs or 100-day moving averages respectively, depending on the beta for these stocks, they could actually be a very good, they could be at a very good juncture to go for a contra buy or maybe some buy on dips or accumulation at lower levels.
Okay, point taken. The numbers for NHPC are just out, and taking first look at the numbers on a year-on-year basis at the consolidated level, there's a bit of a dip when it comes to the profitability. In fact, very large when it comes to the sequential performance. Yes, Q3 is usually a weak quarter, seasonally weak quarter, because there's limited amount of flow in the river. Most of it is frozen, etc. So on a year-on-year basis, it is a bit of a dip that has come in terms of both the top line as well as bottom line, and that's the reason that stock is taking a bigger knock. It was under pressure since the start of day itself, and even for SJVN we had seen that the numbers were on the weaker side, and that too had been holding up with a cut of around 18% I think for most part of the day. Mahantesh, what's your take on these power PSUs and not just financiers? I'm talking about generation as well as financiers, power grid, NTPC of the world as well.
See, there's been a lot that is happening on the PSU stocks, not just power stocks, also in the railway stocks, which are taking them beyond comfort valuation. Now, what is happening on the power stocks is we will, after a long lull, see a bit of a capex phase once again coming in, particularly on the thermal side, which could help boost some of the generation companies because you will have newer capex being announced. That said, as far as distribution is concerned, it's purely dependent on what the government would like to do in terms of overall pricing situation. We have seen in the past how a company like a power grid tariffs are tightly controlled by the government, and any adverse move related to that will quickly mean a collapse in the valuation. Something similar is likely to happen, especially given the fact that many of them have rallied quite a bit in terms of recent stock price rise. So the business outlook for power generation looks better but not necessarily for power distribution companies.
Kunal, what's your take here? I mean, we were just looking at the data for an
Now have a two-pronged strategy over here is, you have to wait out for a point where the stocks complete their phase of correction. So for individual stocks, it could be different. If stocks are low beta and they've gone through a very slow, gradual, steady rally for themselves, you can't expect a 30, 40, 50% correction to these stocks. Maybe the correction at max could be limited to 10, 15% from their swing highs, and that could be a good opportunity for them to for traders to go for a contra buy position. But for stocks which have risen up significantly high, where there's divergence of almost 50%, 100% from their 200 moving averages, the correction over there could be a lot more steep. So you have to have a two-pronged strategy depending on the beta nature for these stocks. I would believe that that could be a very good opportunity for someone who's missed out on the rally earlier or who's looking to accumulate or add further.
Okay, point taken. So those are the recommendations on some of these individual power names. Let's do one thing. Let's take a breather on the show. But as we do that, listen into the commentary that we got on the sideline of Global Business Summit, because a whole host of policymakers and the heads of corporate India joined us there, and they all talked about how it is just the beginning of India's Amrit Kal.
When you compound the aspirations of the people, when you recognize that we already are an economy, the fifth largest in the world, expected to be the third largest in the next 3 years, 2.5, 3 years, an economy which will not only be a $5 trillion on a nominal US dollar GDP basis, but also which has a purchasing power parity, which is at least 2.5 times that. This has prepared the nation to aspire to add $30 trillion in the Amrit Kal, the next 25 years.
This is a sector which will reward you, because for the next 3 decades, the demand is actually going to be slightly more than the supply. My challenge, my huge challenge is to make sure that the supply keeps pace with the demand, add capacities, add generation, add transmission. And we've added a lot of transmission, etc. We've added almost about 200,000 circuit kilometers of transmission in my time. But I have to add more.
The size of automobile industry when I taken charge as a minister, it was 7.5 lakh crore. At that time, our number was 7. And this is the industry which is giving maximum GST to the state government and central government. This is the industry which creates 4 crore 50 lakh jobs. This is the industry which is giving maximum export. And today I am telling you, now after 7 years, our number is third. We just surpassed Japan. Now the first number is China, second is USA, and third is India. And as a transport minister, my mission and my ambition is, within 5 years, India will become a #1 automobile manufacturing hub in the world.
We are targeting $300 billion production in the coming few years, and about $100 billion exports in the coming few years.
Back with closing trades right here on 18 hours, still in the red as we speak right now, and we're definitely the region underperformers because Europe has started off well in the green, 0.5% lower, 100 points knockoff on the Nifty futures. While sure enough, there are winners like an MRF, Astral, DRL, Coforge, as well as Zydus Life. But there are many names which continue to reel under pressure. DRL, of course, has been strong from the word go today. Zydus Life now at the day's highs with a 6.5% move. Coforge is also going very strong, as is Astral, along with Divi's and Wipro too. But the MSCI rebalancing announcement is set to be taking place, and the adjustment kicks in later this month. Which are the key inclusions in the rejig and which are the ones which are getting ousted? Samit is here with the details.
Well, a couple of adjustments that are expected to happen this week, or at least be announced this week. Firstly, on the MSCI front, the announcement is expected to come in tomorrow. An adjustment relating to the same will happen on February 29th. Analysts are expecting an inflow of anywhere between 800 million to $1 billion on the back of inclusions and additions that we are going to see. NMDC firstly will be in focus. inflows of around 186 million US dollars is expected in that stock, and that is nearly 3.5 times its 20-day average volume. Apart from that, it's PNB, BHEL, Union Bank, NHPC and Jindal Stainless which would remain in focus because of inflows of anywhere between 228 million to 156 million US dollars is expected in these stocks, which are anywhere between 0.9 times to 5.6 times that 20-day average volume. Now, these are the possible inclusions in the MSCI Global Standard Index. Apart from that, in the small cap index, the top 5 stocks that are expected to see the highest inflow includes the list of RR Cable, JP Associates, Honasa Consumer, Cello World and IRDA, and inflows of anywhere between 5 to 12 million US dollars are expected in these stocks over the gradual period of time. Now, apart from that, FTSE announcement is also expected on February 16th, and inflows related to same will be coming in on March 15th in the last 30 minutes. Now, top 5 companies that would see the highest in which could see inflows of anywhere between 47 to 124 million US dollars on the back of them getting added in the FTSE index. Apart from this, top 5 companies that could see the most volume action on the back of inflows is firstly RVNL, SJVN, Bank of Maharashtra, Mazgaon Dock and Kalyan Jewellers. The inflows are expected to be anywhere between 13 to 33 million US dollars, which would be anywhere between 1.6 to 7.8 times their 20-day average volume. So keep an eye out for all these stocks in trade.
Absolutely, we'll keep an eye out for that. Thanks, Amit, for that. Keeping an eye out for Tega Industries as well. Not that the earnings came today. I think they came last week actually, but that stock is reacting right now. Even the earnings call, etc. had happened, so not really sure of what commentary Street is picking up. But talking about commentary, that's really hitting hard for Bharat Forge because the moderation in demand that they have flagged off is something which is making the Street a bit nervous. But let me take it across to Naresh to get a sense on a couple of these counters. Star Cement, of course, it's up around 7% if you track this one, and MRF, that's a big heavyweight in terms of the value. I'm not sure of how the volume perk up is on that one, but the stock is up 5%. Naresh?
So Star Cement has been trending positively for the last many months, and we've seen a lot of cement stocks do well, whether it is Ambuja, ACC, or even a smaller name like NCL. So the trend looks positive. Dips to 200 remain a buy on Star Cement as such. So structurally positive on Star Cement. Then looking into MRF, I would expect some bit of a consolidation out here around these prices, because what has happened, if you look at the rest of the names like Apollo Tires, JK Tires, they've all seen some bit of a correction. MRF is the only one which has come back to the recent highs. So not a positive trade out here. So would actually look to book profits if somebody has.
Hero MotoCorp and see what that stock is up to, because even though the numbers were largely in line and the fact that they actually gained market share in Q3, expensive valuations, the run-up which has been very steep in any case in the last 6 months, that surely has been hurting the stock, and it tumbled about almost 5% to start off trade with. Although the management has been very categorical in saying that the margins are going to improve going forward. But you think Kunal, the rally which began very nicely, and I think it was Bajaj Auto which kicked it all off within the two-wheeler pack, that's come to a stall for a bit?
Yeah, it's come to a stall for a bit, but I would believe that maybe another 4-5% correction for Hero MotoCorp, and it could actually be a good entry point for the names. For example, today you've seen M&M being a lot more resilient. The stock is positive. Tata Maruti, on the other hand, the stock is still trading at the 10,700, 750 odd mark, the last I had seen. So, which means that many of these auto stocks are not participating as sharply as for Hero MotoCorp would look to initiate fresh buys or fresh longs on the stock.
Okay, so that's a take on Hero MotoCorp. 3-4% correction could be a good entry point. But Mahadesh, before I let you go, last word on pharma sector, because that's clearly bucking the trend. What's your view on the likes of Aurobindo Pharma, Zydus Life, Dr. Reddy's, if you track any of these names?
Not really track any of these names, but generally speaking, the pharma sectors tend to gain whenever the markets become a little jittery. As you are aware, they are termed to be the defensive stocks. Another development as far as the pharma companies are concerned is that the overall pricing pressure that was visible for many of them in the US market, particularly on the generic side, is gradually waning off. And there are new products that will start coming up in terms of launches for a lot of pharma companies. So a bit of good news could be expected ahead on the top line side, where pricing pressure having gone, new products coming in, we should generally see better growth on the top line, and thereby aiding a bit of margin expansion. So sectorally, all these headwinds that they had faced in the past are gradually going away for the sector to emerge better.
Point taken, Mahantesh. On that note, we let you go. Thanks so much for joining us today. Time now to take the technical picks from our experts. Naresh, what's the closing trade idea?
So continue like Tata Communications, which is at a good risk reward point, on very close to a breakout zone of about that 1770 mark. So at 1730, 1740 looks.
Welcome back. Well, for the market, we are still in the red. There's no respite. Yes, we're off the lowest point of the trading session. It's only individual names that are showing traction because overall it's the public sector entities which are coming under a lot more pressure right now. Even Paytm for that matter continues to be just around that flat line. Let's pull up the intraday chart of Paytm. Has it managed to perk up a bit? Because there were a couple of positive comments. Of course, there was a comment that was there from one of the agencies talking about how Axis Bank official has said that they're willing to talk or willing to work with Paytm as long as, of course, under the ambit of the RBI circular and regulation. And then we also understand that there is a lot of these local brands, etc., which are coming together and merchants as well to back Paytm. In fact, let's go across to my colleague Ankur to get the latest on this story. Ankur, tell us, what is Paytm doing to keep the confidence alive with all of those Kirana and Kirana Club as well as other merchants?
Yes, in a bid to calm merchants, now Paytm is saying that there will be no disruptions after February 29 deadline as far as for merchants are concerned, and they have said that they have a support from industry players like Arvind, like Smash, as Biba, and also it has been mentioned that after the deadline, which has been set as February 29, there will be no disruptions for merchants, and there will be no changes which is needed to be made at the back end for merchants. Now for that, the company has said that they do not need to revisit the existing setup as wherever Paytm Payments Bank attention from many of the merchants, and now the company is reaching out to merchants and claiming that there will be no disruptions for the
trucks into the city. On the other hand, Haryana police have issued a traffic advisory urging people to avoid the main roads of the state unless necessary. Meanwhile, Haryana government has converted 2 large stadiums into makeshift jails ahead of the planned march by thousands of farmers to Delhi. The call for February 13 march came after farmers protesting on the Noida Expressway concluded their demonstration following assurances from the police and authorities to address their demands. The farmers' group's demand was enactment of a law ensuring a minimum support price for crops.
Okay, so that's the latest as far as the Delhi farmer protest is concerned. But shifting focus back to the markets, we have Deepak Shenoy joining us to talk to us about just that. Deepak, what do you make of the market texture? Do you think this consolidation and sideways moves will likely continue?
It's only been sideways, I think, a couple of days. That broad market, of course, has been, broader. The broader market, like the Nifty 50, I think, has been kind of consolidating. But we've seen the mid caps and small caps go up quite a bit last month. So there's a normal kind of a correction that seems to be coming. It's not even a correction; it's just about 3-4% off the top. So I'd say you want such times just to kind of even out the over ebullient types where you want to kind of balance things out. But I think, yes, there's some froth that was there in some of the stocks that has probably corrected a little bit. We're expecting a little more, but that's just part of the game. If you don't have these times, how are you going to have the good times?
The portfolios seem to be bleeding a lot more because the small cap index, for instance, has had the biggest intraday fall since December 2023. So, I mean, of course, a month, but then nonetheless, there are sharper falls is what I'm saying in the broader markets, and individual names knocks anywhere between 15 to 20% on obviously public sector entities. And yes, they had gained that much as well. But which are the pockets, Deepak, where you would sense a bit of an over exuberance and suggest people to book profits?
I can't suggest people book profits. I don't think we can give any advice on this. But in general, we're seeing, okay, some parts, perhaps the PSU universe got a little excited, but I think there's a lot of value there as well. A lot of stocks are still trading at single-digit price to earnings ratios with lots of growth ahead. So I think this correction is kind of more relative to recent moves rather than to anything more long-term in nature. There's also, in stocks, certain chemical stocks, for instance, there's been a disappointment in results. We're seeing that play out in stock prices as well. In other cases, in some banks, we've seen banks being weak earlier. I don't know if banks are weak, overall today, but I know that there is possibly some correction that should happen in NBFCs because there's a fundamental change over there. RBI has gotten quite serious about regulation. There was a speech by an RBI deputy governor. I think Friday it was on their website, which talked quite seriously about how they're looking closely at microfinance, at P2P players, at a bunch of other NBFCs as well. So we should expect more regulatory overhang. So some part of that correction is justified there. Overall, I would not say, book profits or anything like that. I think all market times will show you opportunities to both enter and exit on a stock by stock basis. So you've got to make the calls based on your portfolio.
Deepak, still sticking by with Paytm. The latest that we're picking up is that the Kirana Club report, which is claiming that 42% of Paytm merchants are looking for other partners. The company, it seems, is making all its efforts. There is no such disruption in the pipeline.
Well, we can't comment on Paytm, unfortunately, Ayesha. We have a conflict, so nothing on the stock. I just I hope the whatever resolution happens soon and people are not inconvenienced as a result of this. I hope everybody, including the regulators, are cognizant this is a large payments bank that they're talking about. But again, no comments on the stock. I have at some point, but we'll have to figure out when, because much of the whatever the fundamentals were have not yet reflected in their numbers. It will happen a year down the line. So you may take a long time before the stocks turn around, or it may just start to move again in a couple of weeks. But I mean, I remain positive about the future. We've actually curtailed our position a little bit in some of these stocks because they'd become too big as part of our portfolios. But we continue to hold some of them because the longer term potential is still quite a lot higher. So I think you'll have to take a call on this on an individual basis. But some stocks, for instance, some stocks are pure momentum, and you have to play them as momentum per se, which means you get into them when they're going up and you get out of them when they're going down. That's just how the business works. But if you're not playing them for that and playing for fundamentals, I think some of the fundamentals remain very, very strong. So a longer term thought process may still be useful for some of these companies. I'm not taking names. We're still in the process of continuing to buy or add to more to some of them.
We'd love to hear those names in the next conversation. But in the meantime, let me go across to Sharad to get a sense as to what the cover is on Dalal Street, because there seems like there's a lot of buzz around cement sector, and Sharad has picked out one such cement company which is seeing a lot of action. Sharad, tell us more.
Well, we have been talking with the dealers, and there is a carnage for the second straight session when it comes to the mid caps, small caps, and even PSU names. But there is one stock where there is a buying happening, especially from a long only fund, and that is Star Cement over here. Of course, the volumes have also picked up 13 times its 20-day average, and the stock itself has seen its biggest intraday jump over the last 2 months. Now, importantly, if you look at it, the DI is already invested in the company, includes the name of SBI Mutual Fund having roughly 6% stake in the company. Recently, company came out with its Q3 numbers which were above the street estimates, and importantly, the clinker and the grinder capacity, those additions will be happening in the current quarter, which is the fourth quarter, and importantly, the plant incentive and cost optimization is expected to increase the EBITDA per ton going ahead as per the analysts. And also importantly, the cement demand as per our channel checks has been stable in the north, east as well as the eastern markets. And also importantly, the FY24 volume growth guidance that stands at roughly 9 to 10%. Earlier that guidance was between 11 to 12%. So long only fund buying is happening as per the channel checks when it comes to Star Cement.
Okay. Okay, let's check in on what some of the other buzzers are in trade. And on the downside, clearly it's Bharat Forge. You can't take your eyes off of this one, 11%. But in the meantime, not just Bharat Forge, but a Hindustan Copper that's fallen about almost 10%. There's Nalco as well, which has seen a near 9% slide. There's Bandhan Bank, which is down about almost 7%. MCX is down quite a fair bit, 8.5%. And of course, you know, within the index movers, besides bank like an IndusInd, which is fallen sharply about 2.5%, in Hero MotoCorp, there's BPCL and ONGC, which are seeing a sharp slide. Now, Kunal, this also comes on the back of acute outperformance from the entire OMC pack and ONGC put together. You think the dips are going to get arrested and bought into soon?
Not so for the OMC. In fact, for the OMCs, I would actually believe that these stocks should be good for at least another 10 to 15% correction, individually, because the likes of IOC, for example, was very close towards breaking the 200 mark. I think 196.98 was the high for the stock. Currently, it's at 174. The 50 DMA, for example, for the stock is still at 138, and the 200-day moving average is at 103, 104 for IOC, which means that the stock had diverged from its long-term moving average by a margin of more than 90 to 95%. These are very steep divergences for typically low beta stocks like the OMCs, and I believe that when such kind of divergences, when they correct themselves, these stocks, they tend to get into a mean reversion phase for at least a 50-day moving average, if not more, which means I would expect these stocks to correct and come back towards, say, 145 to 150 mark for IOC, and similar kind of a percentage correction for the other two names, BPCL as well as HPCL.
In fact, we spoke with a whole host of these earnings managements, the likes of Paris Defense, Bandhan Bank, etc. Let's hear out the sound bites post their earnings.
We would want to keep a steady 2x or 2.5x of your revenue. So this is on schedule. The higher growth will come in the fourth quarter, and it should with a tolerance of 5-10% here and there, but it should be on schedule.
Tight liquidity situation, cost of fund has increased across all banks, and that is impacted to the NIM. So after that also, if you see, our NIM is a 7.2%. We are continued the last 2 quarters. So we feel that as per our guidance, this financial year 7 to 7.5% will be like to see that we can be managed in that.
Domestic segment is growing faster than the exports currently. We are estimating about 30% growth in domestic revenue and about 10 to 15% growth in the export revenue.
The gross margin has substantially improved. We are currently at around the new segment, that is the retail. We have been opening stores. At the beginning of this quarter or the end of last quarter, we are already 140 stores. Retail stores. These are company-owned, company-operated exclusive outlets.
We feel that the margins-wise, we are good. Primarily, yes, on the demand side and the growth side. This quarter and the next quarter are looking like flattish growth. This year we should be ending up with a growth in the flat region. But if you look at the 25 onwards, we should see the growth coming back in the first half of 25 and should continue to see the growth journey from there on.
Okay, so that's the latest commentary coming in from a lot of these players as well, the earnings reaction that is. But taking stock of some of the other buzzers, Medanta is up around 5%, or Global Health as we call it. Zydus Life has continued to gain after that earnings and the buyback announcement. There was a con call, positive commentary coming in there. And then the entire pharma pack, whether it's a Divi's, whether it's an Aurobindo, other names as well, they're seeing quite a bit of traction. What's your take, Deepak, on the pharma pack, whether healthcare, whether these, CDMO players, etc.?
So healthcare went positive on some hospitals. That I think has been part of our theme for a while. We're positive on Narayana, not just because of their India business, but also because of the Cayman business, which we think will be quite significant in the overall scheme of things. Pharma not very keen on investing in it right now. Large amount of uncertainties arise. I think this year we will see a lot more FDA action as well. They haven't acted for their part of maybe our momentum portfolios or something. But on a fundamental basis, I'm still not comfortable getting into pretty much most of the pharma pack. Perhaps later this year. will take a bigger call on it. Results have been quite decent, better than I thought they will be. I thought they'll be much worse. In some cases, they're actually super surprising on the upside. I would say that still I'll wait for a couple of quarters more before I see the response to FTA action, if any, and then take a call on them.
Okay. That's the take coming in on the overall pharma as well as the healthcare space. For the market, we are settling in lower by about 0.5% for sure. Barring those few dots of green, a large part of the market continues to reel under pressure. In fact, we're closing in on pretty much the session lows. On the brink of even breaching that 21,600 mark, which we may have already, 170 points lower, no less, for the Nifty spot, 21,677 for the Nifty futures. And today, it's really about the pain across the broader markets. I mean, not like we've not seen such days earlier, but yeah. It's the small as well as the mid caps which have fallen a lot more than what the benchmarks have actually done. Kunal, you think that may as a trend continue, that you see a steeper fall in mid and small caps because that's where the chunk of the profits are?
Yeah, it could be very much possible that the next couple of days, maybe the mid cap and small caps could actually fall a lot more because these indices for the first time I think are going through a classical mean reversion, and mean reversion is a very critical process for many of these asset classes which move up significantly higher. So after a stretch, I think if I'm not wrong, last year same time in the month of Feb end, the mid cap index or the small cap index rather was almost at 8,000, and the recent high for the small cap index was almost 16,200, which means that in the last 1 year you've actually seen these small cap indices double, but many of these small cap stocks have gone through quadruple or such kind of returns. Now, when these mean reversions happen, it's not a 1 day, 2 day or 3 day process that these stocks would get into a correction and then the correction arrests after a fall of 10-15%. It's a process which takes place by for at least 1 to 3 months, and depending on the degree of mean reversion for themselves. So I think one should not be in a hurry to try and chip into these stocks just because they've corrected by a margin of 10-15%. I would believe that you could probably get better opportunities over the next couple of months.
Deepak, do you track Godfrey Phillips and of course ITC closely?
Godfrey Phillips, not so much. ITC, I think everybody tracks it in some way or the other.
Sure. So what's your view on that? ITC as well didn't point to a very big pickup.
Well, honestly, it's good for India if they don't sell tobacco quite much, honestly. But I think that's a cash business in the sense it generates cash. That cash is not going to grow at a meaningful rate. Growth is not going to come from tobacco. Say the primary business here is going to be FMCG. Hotels has been a cyclical in the last 20 years. This time the cycle has lasted much longer, and I think I think they've demerged or something like that on the hotels business, right? So there's possibly there is an ownership of the hotels business, but I think part of that gains will go to ITC Hotels shareholders, which is going to eventually get listed. But I feel here that FMCG is what their game is going to be going forward. The overhang on the stock is BAT's comments that they will sell or they will look to monetize stake. They own a significant percentage. ITC in general has been, in the last few years, has been a relatively low float stock because most of the float has been kind of held by long-term players. And therefore, pricing changes, there's not been much availability in that way. What used to be earlier, the government threatening to sell stake through the SUTI route, now it's BAT threatening to sell stake. So I think for the near future, if you're looking at it as a 3-year or 4-year kind of process, I think this overhang will remain of just BAT selling shares. The company may do well on FMCG, but I don't think it'll get the FMCG valuations, simply because some of the long-term holders want to sell, or one of the long-term holders wants to sell stake. So just a fair warning that float sometimes plays an abnormally high role in India.
Talking about earnings, numbers from Mazgaon Dock were just out and they were flashing for you on the screen. The stock also reacted positively. One of those PSU names that actually managed to be in the green, and that's all on account of numbers because the profitability almost became 1.5 times on a year-on-year basis. So no surprise, the kind of reaction that we saw there. But on that note, Deepak, we'll let you go. Thanks so much for making time and speaking with us. Taking it across to Naresh to get a sense on Mazgaon Dock first, and secondly, your BTST ideas.
So still would be an avoid on all PSU names which have done really well. So would wait it out and avoid on must count off. In terms of stock specific ideas, a long and a short, a buy on Tata Communications with a stop loss at 1720 and a target price of 1800. Second is a sell on DLF with a stop loss at 818 and a target price of 795.
What about you, Kunal? What's the BTST or STBT idea?
So I'll go with the large cap name, IT stock. HCL Tech is a buy. The stock looks attractive for a target of 1705. Stop loss at 1645. And the second would be a sell on India Cements. The stock has confirmed a break below its previous major swing support around the 240-44 mark. So keeping a stop loss of 242 would suggest a sell with a target of 228.
Okay, that's the latest STBT, BTST ideas coming in from our technical experts. On that note, we let Naresh as well as Kunal go. Thanks so much for joining us. And we're ending the trading session pretty much in the red. That's how most of the day was. 160-point cut. It was almost a cut of 700 to 800 points the last time I looked at that. So yes, that's the space which is coming under pressure, and your mid-cap index and small-cap indices are not far behind. There are deep cuts there. In fact, the mid-cap index down 2.5% and small-cap seeing a cut of almost 4%. Not really sure the last time we saw such a big cut. Of course, the advanced decline ratio then was favoring the declines. In fact, sectorally speaking also, it was only IT and pharma that managed to held up in the green for most part of the day, because other than that, whether PSU banks, real estate, metals, they were all coming under pressure, and banks clearly were the key laggards. So all of those names were in the red. But that's how we're wrapping up Monday's trading session. Thanks so much for being with us.